This is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history. There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Teeko Tiwari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
Welcome to this week's IG Live. I'm looking forward to talking about what's going on here in the markets. It's unbelievable how fast we have seen things change. And this is really the nature of crypto. Things can move very, very quickly. It looks like the world's coming to an end, and then at a snap of the fingers, everything changes. So I'm really looking forward to talking to everyone about this a little bit today and about some ideas that I've recommended in the past. And I just want to remind everybody, the place to go to get my commentary right now for free is my free e-letter, which is tiwariresearchgroup.com. And I'm putting out anywhere from 1 to 3 articles a week, depending upon what's going on in the market. And I'm also actually occasionally making recommendations in some of those essays as well. Okay, I'm going to get things kicked off here. So in the beginning, what I mentioned was, this is crypto. And in crypto, the world can be coming to an end. And then in the space of a week, everything can change. Now, again, the best place to get my most up-to-date commentary for free is at tiwariresearchgroup.com. So on May 13th, I wrote an article about Ethereum, suggesting that it was an excellent time to buy Ethereum, that it was a low-risk, high-reward situation, and I gave 2 ways to play Ethereum. One was to actually buy ETH itself when it was trading at around 2,900, and the other was to buy ETHe, which is a trust that trades on the stock exchange, but trades at a big discount to the underlying Ethereum that it owns. And so my thesis in that essay was very simple, was that the market was extremely negative on Ethereum. Nobody believed that an Ethereum ETF would be approved, and that if you bought ETH and the ETF was not approved, the price wouldn't go down because it was already priced in. But if by some miracle an ETF was approved, nobody would be positioned for it, and you would see a massive increase in the price of Ethereum. And that's exactly what has happened. Since May 13, ETH has gone from a low of 2,900 to a high of 3,800. That's 31% in about a week. ETHe has done even better. That's gone from a low of 21 to as high as $33.85. That's a 60% move. So what's the key takeaway, and what is it that I want to leave you all with? It's not me breaking my arm, patting myself on the back for that recommendation. The key takeaway is, friends, if you want to make above average returns, it doesn't matter if it's crypto or housing or stocks, you have to buy when things look terrible. You have to buy when everybody else is running the other way. Now, you can't always do that, because sometimes there's a good reason why people are running the other way. So how do you apply good judgment to that idea? Well, the first thing I do is I look at the fundamental asset that I want to invest in. And I say, okay, is this an asset that I'm happy holding even if my timing is incorrect? So there are a few assets in the world like that, right? Google, Apple, Microsoft, Amazon. We know that if we are buying one of those assets on weakness, even if we have bad timing, just because of the scale of that business and how important those businesses are to the world, eventually we will get bailed out of bad timing. Now, if we look at Bitcoin and we look at Ethereum, even when I've had absolutely horrible timing on those assets, I have known, because I am so early in the adoption cycle on those assets, that fact will bail me out of bad timing. So the other thing that we have working in our favor is that we are very early in this bull cycle. Bitcoin just broke its all-time high in March. We're in May, March, April, May. So we're 3 months into this new all-time high. So knowing that if we have a pullback and buying on that pullback, so we have two things that help us to bail us out of bad timing. One is we are very early in the bull market, and two, we are very early in the overall adoption cycle of these assets. And so it is, I just can't overemphasize how important it is to train yourself to buy on down days, to buy on weakness. Now we have Bitcoin, which was trading at 55K just a couple of weeks ago, has now roared all the way back to 70,000. And now everyone's saying, should I buy now? Should I buy now? ETHe, which I recommended last week at 2,900, is at 3,750, and everybody's asking me, should I buy now? Should I buy now? Should I buy now? So, we're now stretched right up against resistance. Now, longer term, over the course of this bull market, do I expect all of these things to go much, much higher? Yes. But in terms of from a trading standpoint, remember what I've been telling you all through this process. When you are in a bull market and you're trading, you buy the dips and you sell the rips. So you have two stacks. You have your core stack, which is your core investment that you're going to hold for the large scale move, which, as you know, in Bitcoin, I believe Bitcoin will go to at least 150K through this bull run. I think Ethereum has a good shot at hitting 10,000 during this bull run, and that's what the long-term stack is for. Then you have your short-term opportunistic stack, and your short-term opportunistic stack, you buy the dip when everybody's running the other way, and then you sell the rip, right? When everybody's running back in, when the prices are going up. So this is easy to say, but hard to do. But if you want to separate the performance that you're experiencing in the market from everybody else, this is something you must learn how to do. And you do it by understanding position sizing and understanding the actual asset you're investing in. Do you apply this approach to GameStop or some crazy altcoin? No, you do not. Because you don't know if that altcoin's going to go to zero. You don't know if that meme stock is going to make it throughout the entire cycle. So I use this type of approach on assets that I know that are going to have value from cycle to cycle to cycle, or assets that are early on in their adoption cycle. And every now and again, you get these opportunistic plays to make these mammoth returns in a very short period of time. ETHe, when I recommended it on March 13th, I called this trade one of the lowest risk, highest reward trades that I had seen. When you have that opportunity, you've got to take advantage of it. But that opportunity, when it faces you, no one is going to say, at least the crowd is not going to agree with you. Thank you very much, Matt. But when you're moving against the crowd and you have that larger macro field in your favor, meaning adoption is still low and going larger, investor sentiment is down, but the asset still has tremendous value, that's rare when you get that kind of setup. And then you have to take advantage of it, is my point. So, since we've been doing these lives, I haven't made a lot of recommendations, but I've made a few. So back in April, when Bitcoin was getting beat up, the alts were getting beat up, I recommended Solana at 120. It's trading at 188. That's up 156%. I recommended Doge at 12 cents. It's at 17. It's been as high as 17.5%. That's up 45%. So again, if you go back and you look at those past lives when I was making those recommendations, the markets looked awful. They looked awful. And nobody wanted to buy into those types of markets. So again, training yourself to trade and to buy when you're not getting external validation either from the media or your friends or from other folks. It's hard, but until you can do that, you're only going to get either subpar or average returns. Above average returns come from doing things that average people aren't doing. And really, if I have any mission and why I continue doing these videos and why I will continue writing newsletters, is really to help you make better decisions around how you allocate capital, when you allocate capital, and what you allocate capital to. Because once you get this kind of rewiring in your brain, it changes everything. I mean, it just absolutely transforms how you operate in financial markets and the amount of money that you can make. But again, it's not easy. Okay, in terms of what's next for Bitcoin and Ether, well, we should be hearing from the SEC tomorrow about whether ETH is going to get approved or not. Chances are looking much better that it will be approved. If it gets approved, you might see what we saw with Bitcoin, where people treat it as a sell the news event, it sells down, new buyers come in, and then it rallies. To me, if an Ethereum ETF is approved, it's incredibly bullish, and pushes ETH to probably 6,500, 7,500, somewhere in that range, on its way to 10K. If you look at the Bitcoin charts, we're coming right up against resistance that goes all the way back to 2021. Will Bitcoin break through this time or not? I don't know. I don't have a crystal ball. I know that Bitcoin has moved up a lot over the last few weeks. We've gone from a low of 56.5 up to a high of over 70,500. That's a huge move in a very short period of time. That's 3 weeks. Do we reverse here or not? I don't know. I don't like buying right at resistance. I really don't. I'd rather buy the breakout or buy on the pullback. Bitcoin has given us a lot of opportunities over the last few weeks to buy it on the cheap, in the 50s, in the low 60s. I wrote an article saying if you see 62K, buy it. If you see 52K, buy it. We didn't see 52. We saw as low as some charts 55 and change, other charts 56 and change. But Bitcoin will always give you an opportunity to buy it cheaper. So again, if we break through this resistance, we close above 75K. I mean, we could go to 120 like that. But I don't know if that's going to happen on this particular attempt to get through resistance. And I don't have a good read one way or the other. And that's the most honest answer I can give you. When do I anticipate altcoin season to start? Well, it's kind of already starting, but in terms of the really huge, crazy rips, generally what happens is, you have Bitcoin breaks out, has a huge run, then ETH has a huge run, and then you start seeing the altcoins start just having a massive run. So I would say later in the year, maybe it's 6 months, maybe it's 9 months, but the time to make money in the the time to make money in the alts is when they're underperforming. Tika, your thoughts on how an ETH ETF can hold unregistered securities if the SEC decides ETH is a security? The SEC is going to decide that ETH is a security. And if they do decide ETH is a security, ETH will sell off, and that will be a major buying opportunity. Because in my opinion, there are too many moneyed interests that have their interests aligned to ETH not being deemed a security and to ETH being available in an ETF wrapper. And so I think those incentives will trump any desire that the SEC might have to call Ethereum a security. But again, if the SEC labels Ethereum a security, it will sell off. There's no question. But that will be a buying opportunity. I'm starting my new service at the end of June, and I'll have more details on that. And again, if you've just joined, the best way to stay in contact with my ideas and what I'm doing is at tawariresearchgroup.com. I put out a free e-letter there, and you can sign up for it at tawariresearchgroup.com. Question is, T, why will you invest your future in I bonds over T bills? What's the difference? No, this question refers to a comment that I made earlier when somebody asked me, what are you going to do with your your Bitcoin profits? I think I said I'm going to put them in T-bills, short-term, T-bills, which are 30 to 90-day instruments, and then I'll allocate them to other investments later. So T-bills will probably be the instrument that I use. In NYC, there are many restrictions for buying smaller altcoins. Do you know a way around it, a legal one? That's a minefield that I'm going to respectfully avoid. YouTube might be your friend for answers to those types of questions. Okay, passing of the Senate to overturn SAB 21 treatment on Bitcoin, institutional balance sheets is huge news and very bullish, but seems to be overlooked by the media. What are your thoughts? This is a great question, Graham. Okay, so let me bring this up for everybody. So there was a special accounting bulletin put out by the SEC, which said that if banks hold Bitcoin on behalf of their clients, they would have to hold it on their balance sheet as a personal liability for them, and then hold other assets as a way to counteract that liability. Now that's insane, because when you hold assets on behalf of a client, there is no liability. You hold the asset. There's no other counterparty. So this was a rule proposed and passed by the SEC as a de facto way to ban banks from holding crypto assets. So just recently, both the House and the Senate overturned this rule, SAB 21. And President Biden had said that he was going to veto that overturn. Now, there's been a bit of a shift in the rhetoric coming out of the White House around crypto ever since President Trump came out and said that he is now pro-crypto and actually taking funds in crypto. First time a presidential candidate has ever done that. I believe that's the first time. So this is a huge narrative shift. So I don't think President Biden can veto SAB 21. He runs the risk of alienating 52 million American voters that own crypto. And the thing about crypto is that, one of the things I love about crypto, especially Bitcoin, is that Bitcoin doesn't care what end of the political spectrum you're on. So you have hardcore Republicans, hardcore Democrats, libertarians, everybody in between that own crypto, that own Bitcoin, because it's built around a universal idea that our money should be our own, our money should not be diluted, and that we should be able to hold our own money without government interference. And that's a universally held belief that we can all unite around. And President Trump is very savvy because he understands the importance of this voting bloc. Whoever controls that crypto voting bloc, I believe, wins the election, because that voting bloc is made up of Democrats and Republicans. And one thing I know about America, you can do a lot of things, but you can't attack people's wealth. You can't attack people's money. And crypto has become such an important part of millions of Americans' financial lives that they are not going to let a politician stand in the way of their own financial freedom. So I think the Democrats are realizing that, and realizing that they cannot make crypto a politically divisive issue. You can't, if they go down the camp of being, we're negative crypto and President Trump is positive crypto, they run the risk of losing millions and millions of votes. So anyway, that's a long way of me saying that I think SAB 21 will not get vetoed, which opens the door for banks to custody crypto assets, specifically Bitcoin. And what's the net effect of that? The net effect of that is I believe it takes more Bitcoin out of the market, physical Bitcoin, because they have to custody it. And then I also think once they become comfortable with the asset, at some point, they will start creating financial products around the asset, specifically lending products, which this market desperately needs. Is this a fact? RWA, real world assets, and AI tokens will ultimately do the best this cycle? Well, is it? I mean, I don't have a crystal ball, Justin. I can't say that definitively that's a fact. I'm sure they'll do well, but I don't know that I would say it's a fact that they will do best this cycle. Okay, question is, will my service be identical to the one I have at Palm Beach? Will I have something similar to Palm Beach Income? I won't have anything similar to Palm Beach Income to begin with. My first newsletter will be more similar to Palm Beach Confidential. I will want to add a crypto income component because it's an enormous area of opportunity and is underserved by current services right now. See, I think it would be good to have a small growth team in Asia, Singapore maybe. Perhaps. I don't have the relationships there yet. I mean, I have plenty of research relationships, but not relationships in terms of people, that I put on my payroll. Do I think there will ever be an XRP ETF? Yes, probably. Once they get past all their court case. I think in the future, just about all crypto assets that have volume and interest by investors will get an ETF wrapper put around them. Are there any indicators us retail investors can use to gauge whether Bitcoin is overbought and thus heading for a correction, or is it just down to guesswork? Thinking about dip buying opportunities. Well, look, I can't really do a deep dive in technical analysis here. It's just not a great format for that. But again, just think about it. Go back and look at how Bitcoin has traded in the past in its early stage of its bull run. Guys, I'm so sorry. My allergies are just really kicking my butt today. I really apologize. Look at how much it drops. Sometimes it'll drop 15%. It'll have multiple times where it drops 20%, 30%, and occasionally it'll go down 40 or 50. So look at that, and you can just say, okay, early in a bull run, every time it drops 20%, I'm going to go buy some more coins, or when it drops 30%, I'll buy even more. I've written extensive articles about this, about how to use weakness to accumulate more Bitcoin. So take a read. I think the article is called "Bombs Are Dropping," and you can find it on my website at TawariResearchGroup.com. Tika, if you were a newbie and you made 1.5 million in profits this bull market, what interest-bearing investments would you put your money in to live off? Example of this is annuities. Well, I can't give you, I'm not a huge fan of annuities. So, and I can't, let me just be clear, I can't give you personal investment advice. But, there's a few things that I ask myself this question a lot. So right now, municipal bonds are yielding around 4%, interest-free, right? 1.5 million at 4% is $60,000 a year, and you have to pay zero tax on it. Depending upon where you live and the kind of lifestyle you want, $60,000 a year tax-free is not bad. I don't believe in never working again. I like to work. So the idea of retiring and just sitting around and fishing all day, and I love to fish, would drive me bonkers. So that's certainly one area. Another is, the 4% rule of putting money into the S&P 500, which again gives you the same return that you would get on a muni bond portfolio. The difference is that your wealth is protected through time because stocks generally outpace inflation. I wrote an article also about using Bitcoin as an inflation hedge, where you could have a portfolio that is essentially 90% risk-free bonds and then 10% Bitcoin to act as your inflation hedge. So you're getting the income from the bond portfolio, and then you have the Bitcoin there to protect you against the dollar debasement that I expect will occur throughout this decade. Okay, this is a question from Edwin. What would you tell a new person trying to get into the market now? My response has been you should have been buying a year or two ago, but you can still make money. This run, not so much. Look, I think there's an old saying, right? The best time to get started investing was 20 years ago. The second best time is today, right? There's this saying, time in the market beats timing the market. So you just get started. What I tell new people is just buy the S&P 500 if you just don't want to deal with anything. Just dollar cost average into the S&P 500. Know that every few years you're going to see your holdings decline by 20 or 30%, and every probably 8 to 12 years or so you might see a 40 or 50% drop. Just keep adding and keep buying. When it comes to Bitcoin, dollar cost average, and just don't worry about it. If you want to have a kind of a low risk way of investing over the long term but still have good potential upside, you can put 80% of your money in the S&P 500 through an ETF such as VOO, and 20% in Bitcoin as your growth part of your investment. And just, again, dollar cost average, and don't worry about the volatility. That's generally what I tell new people. All right, friends, I want to thank you so much for tuning in. I really appreciate it. I appreciate sharing this time with you. Be sure to go to TewariResearchGroup.com. That's where you're going to get my best ideas. I have a free e-letter that goes out there. I'm going to be launching my new service at the end of June, and the way that you will get notified of that is by being on my email list at TewariResearchGroup.com. Friends, I want to thank you so much for tuning in. It's always a pleasure to be here with you, and I want you to always remember, let the game come to you.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatewari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.